In this video, we're going to break down the federal income tax, a brief history behind it, what we have now, and then how it actually works. I'm Bradford of the Penny Pincher Guide to Personal Finance, and out of all the various taxes that we actually have, the one that probably impacts your wallet the most is going to be the federal income tax. Now, while everybody alive today has always known and has always lived with the federal income tax, that wasn't always the case. In fact, for the first almost 100 years after the War of Independence, there wasn't such a thing as an income tax at all. In fact, the federal government actually made all of its revenue either from tariffs on imports or through excise taxes. It wasn't actually up until the Civil War that the first iteration of what we now know as an income tax was ever implemented, and that was done to be able to fund the war effort. But even that was actually repealed by Congress in 1872. And then from there, for about the next 40 years, any attempt by Congress to try to institute some sort of income tax was immediately struck down by the Supreme Court as being unconstitutional, because based on a strict reading of the Constitution and the amendments up to that point, there was no power given to the federal government to actually directly tax the individual citizens. And it actually would have stayed that way up until 1913 with the ratification of the 16th Amendment to the Constitution, which gave Congress the explicit power to be able to directly tax its citizens. And that's when the first federal income tax was actually implemented and was the beginnings of what we have nowadays. But 100 years ago, it was significantly different, because even with that first income tax that was actually implemented, less than 1% of the total population actually paid it. And of those that did, they only paid 1% of their net income in taxes, substantially different from what you and I pay today. Now, moving forward into the 21st century, the tax system that we have right now with the federal income tax is called a progressive tax system, and we operate underneath a marginal tax rate. Now, at its core, that means the lower your money is, the lower total percentage of your income you're actually going to pay in taxes. And as you make more money, you're going to increase, going from a lower tax bracket to a higher tax bracket, which means that your larger total effective tax rate that you pay to the federal government is going to go up. Now, that's kind of wishy-washy, and I know there's a lot of misunderstanding and misconceptions about how a marginal tax rate works, so let's jump over to an example that can hopefully flesh it out. So here we have the 7 tax brackets that the IRS published for tax year 2023 right now. And it ranges all the way on the lowest end of a 10% tax rate, and that goes all the way up to a 37% tax rate at the upper end. And then within those tax brackets, you actually have various amounts that correspond to your specific filing status, whether it's single, married filing jointly, or head of household. So for right here, I've listed the most common, which are single and then married filing jointly. So you can see at the lower end, if you make less than $11,000, you're going to be paying a tax rate of 10%. And then at the upper end, if you make over $578,000, any money you make above that, you're going to be paying a 37% tax rate. Now, what can be kind of confusing is that just because you make over whatever the previous tax bracket was, does not mean that all of a sudden you pay whatever that next tax bracket's tax rate is on all of your money. You are only paying that tax rate on any money you make over the previous bracket. Now, that's kind of hard to conceptualize, so let's jump into a specific example. So in this example, we're going to be operating underneath the following assumptions. 1, you're using a filing status of single. Your income is going to be $100,000. And then for simplicity's sake, we're going to say that you have no deductions and no credits. And that's going to take us to this next table where I've laid it out in clear detail. So this one, we're going to be moving left to right, top to bottom, going from your income, seeing the margin that's actually being taxed in that bracket. We're going to be looking at the tax rate, and then we're going to see what's your tax liability or how much you actually owe in taxes from that specific bracket. And now to kind of tie that back into the previous page, we see we have the same table that I pulled over from the last slide. And then because we are having an income of $100,000, that means we're going to be working underneath the following tax brackets: the 10%, 12%, 22%, and then at the upper end, the 24% bracket. So how we're going to work through this is because you are only paying the tax rate that falls in the current tax bracket, we're going to start from the very bottom. Now, the first tax bracket is everything that is less than $11,000. So we're going to do $11,000 minus 0 because there's no previous tax bracket, which means the margin being taxed is $11,000. And that $11,000 is taxed at a tax rate of 10%. So we'll do 11,000 times 10% gives us a tax liability of $1,100. Now moving into the next tax bracket, that means anything that is over $11,000 all the way up to the next tax bracket, which is going to be $44,725. So we do the difference there, which gives us a margin tax of $33,725, which is taxed at a rate of 12%, meaning our tax liability for that amount is going to be just over $4,000. Now we're going to continue repeating this process of taking whatever the next bracket is, so long as we're making more money than that, subtracting the previous bracket, getting the margin that is taxed, multiplying that by the tax rate, and that's going to give us the tax liability. Now, once we get into the final bracket where we don't actually make more money than what that bracket allows, so in this case, we're getting into that fourth bracket of the 24%, we have $100,000. We're going to subtract the bottom of that bracket, which gives us a margin taxed of $4,625. Multiplying that by the tax rate of 24% gives us a final tax liability for that final bracket that we're in of $1,110, which means once we add up our total tax liability, that gives us an actual total tax liability of $17,400. Now, even though we're actually in the tax bracket of 24%, that isn't our total effective tax rate, because we have to actually add everything up and divide it by our total income, which, even though we're in that trait of 24%, our tax effective rate is only going to be 17.4% out of the $100,000 that we earned. Now, that was quite a few steps to actually figure out how much we owed in taxes. Now, fortunately, you don't actually have to do a math problem every time you want to know how much you actually owe. The IRS publishes a really helpful set of tax tables every year in the fall that accompanies their IRS Form 1040 and their IRS Form 1040 General Instructions. Now, if you're unfamiliar with that exact label, that's going to be the tax form that you actually file every year, whether you're doing a paper copy using some tax prep software or your CPA, and that is the form that corresponds to your individual income tax that you have to file every year that you actually pay taxes. So we're going to jump over into that table. I'm going to show you how easy it is to use, so long as you make less than $100,000. Because if you make more than $100,000, you do have to do some additional math that does make the process a little bit more difficult. Fortunately, with this table, since the median income is well less than $100,000 in the United States, most people should be able to use this and not have to do any additional math. All right, so here we have the IRS tax table from 2022. 2023 one will not be published until later this year, probably in October or November. So how this works, kind of similar to the last table that I had, you're going to work left to right, top to bottom. The two numbers that you need to know, or rather the two things you need to know, is how much money you actually made, as well as what your tax filing status is. So for this one, we're not going to use $100,000 because you can't use that for this table. So we're going to say we made $1 less than that, so that way this table is still applicable. So we're going to jump down to the very bottom section of this table, and we're going to go and figure out exactly how much we actually owe when it comes to our tax liability. So here we're going to say we made $99,999, and we're going to use a single tax filing status. We're going to go all the way to the bottom, and that's going to give us an amount taxes due of $17,830. And now the reason we have the discrepancy here in the amount actually owed compared to what I was using in the previous example is because the tax brackets do change from year to year, and taking into account of inflation, the brackets are actually going to go up over time. So the amount that you owe on the same amount of money in the future is probably going to be less than what you owe right now if you made the same amount of money. Unfortunately, once you even understand how our actual income tax system is structured and the general use of how to use the tax tables to figure out how much you owe, that's only the tip of the iceberg when it comes to understanding how our taxes work. Once you start to add in payroll taxes, standard versus itemized deductions, tax credits, business versus personal taxes, it can really start to get rather overwhelming. And that's how I felt at first too, until I spent the time reading through thousands of pages of IRS publications, speaking to various CPAs, and watching a ton of YouTube videos to try to understand how it worked. But absolutely none of that should be required for every single person to have to go through to be able to understand how our taxes work, which is why we put together this tax playlist to help you get started and have an understanding of the vast majority of tax situations that'll get you started and are straight to the point. Thanks for watching, and from your first penny to your first million, we're here to help.